Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com on a Tuesday, third day of October. Jolted the market, right? Yep, the job openings number came in stronger than expected. That kicked off a more selling in the bonds, yields, 10-year yield coming up close to 5, and finally hitting stocks. We talk about this ad nauseum, interest rates still driving what's going on. So in any event, welcome everybody. Hope everybody is having a volatility picking up. So some opportunities, but still have to be very careful. We're gonna actually have a class coming up here a week from Thursday on correlations, which is really important, especially these days with what's going on with rates, the dollar, and all of the associated correlations there, and so forth. So it's really important that you learn about that, because it's not just about buying demand and selling supply. As you know, that just doesn't work. If you're just trying to trade off of that, good luck. That just is not going to work. There's all kind of other factors involved. So that class is coming up. We'll start posting some links. I'll be tweeting about it. That's going to be a week from Thursday. So sign up for that. And then also, obviously, give me a thumbs up, put some commentary in the chat box there, and we'll go from there. Okay, let's go ahead and get into the charts, everyone. So let me share my screen here, and let's start with the S&P as we typically do. It feels pretty bad today, obviously, and unless you caught a momentum move earlier this morning, you probably are still making a ton of money shorting. And in fact, looking at this close-up chart here of the S&P, if you really look at this with a kind of dispassionate view and just looking at the charts, we are we're roughly about 10 points from last week's low, right? So those of you, a lot of people just, the market's crashing and this and that, whatever. Okay, so again, if you take a close-up view, what you'll see is that the S&P, right? We made a low of 42.77 last Wednesday, right? Where we closed 67. So if you took that breakout right here below that low, you're up a whopping 10 points, right? So again, put things in perspective always. And there's a lot of stuff going on under the surface. A lot of these washed out. Dollar Tree was up today. Utilities were up. I mentioned that a little bit. I've been talking about with my members about utilities. Check out XLU. That got really hit hard yesterday. There's a lot of opportunities coming up. A lot of these stocks are getting washed out. Bonds, I think, also TLT looked like to me like it was today was one of the everybody threw up the white flag on TLT. I think that kind of felt like that today. Similar with the parabolic move in rates right now, and looks similar to what oil did last week. So we may be getting close, but who knows? Again, we'll let the market kind of tell us. But all in all, just again looking at the S&P, we bounced off of that level nicely right here. We got a nice bounce off of that, and now we're coming into the breakout point here about 42 something. So maybe get another bounce. Clearly now we've formed some supply up above, and so they're coming into October, bear killer. We could be having one last washout. VIX did jump above 20 today. Maybe we need it up to 22, 23. I am starting to sense a little bit of fear in the markets finally. So we'll see if that pans out. NASDAQ similarly. NASDAQ still kind of relatively holding up better. There's some really nice levels in the NASDAQ coming up here as well. And again, I think the first to recover will be the big mega caps, which did actually well yesterday in spite of the higher rates, but we'll see if that pans out. But I think there's some opportunities coming up here in some of these mega caps. You know, AMD, NVIDIA hasn't broken 400. Apple's still hanging around 170. So, you know, as long as that holds up, I think that, you know, the market holds up. And then coming into the November, December seasonals, we should be looking for some kind of a bounce up, maybe up into, you know, there's some really nice levels to sell against up here in the NASDAQ. But, you know, if you went long somewhere down in here, that's, you know, that could be a nice trade. Okay. Also the Dow, you know, hanging around some of these levels here that I pointed to the other day. Russell also coming close to some levels as well. Market's getting a little bit stretched. We'll see how that goes. And then, you know, the 30-year, just this is a crash almost, right? I mean, every time we've seen this kind of movement like here, we had a huge bounce. We may be on the precipice of having that right now. Man, that was very similar. You can see that just the relentless back in late a year ago, very similar. You know, almost like a crash at a little bit higher levels, obviously on the 30-year, and then we had this massive bounce. I think we're probably again on the precipice of having that, and then the 10-year is also coming into some really decent looking weekly areas down here at 105.25. So we'll see if that, and then, you know, the yields are just gone parabolic. So that looks to me, again, like a possible blow off. We could get a situation. Last time we had that blow off was right here, and then we came down pretty good. You notice the similarity in that pattern against that pattern. So even if we just come down to, you know, maybe 420.25, that would be actually a nice trade as well on the 10-year. The short end of the yield curve, interestingly, is not moving. So this is the 2-year. You see the 2-year not moving a whole lot. So it's all on the long end, and that again speaks to the uninversion or of the yield curve. You know, it's been inverted for over a year now, and this is now changing the dynamic. So what's happening is the long end, the yields on the long end are coming up, trying to match the short end, and that's going to be a flattening yield curve. So that's actually what's happening there. So all the selling is really on the long end of the yield curve. Dollar, interestingly today, a very interesting pattern in the dollar today. It did stall, and it maybe it's going to break the link finally with interest rates. You can see it's kind of pausing here. Did not make a new high. It kind of fell away from that. So it's going to be interesting to see if we get any follow through, and maybe again it's just another pullback like we had here. But at some point, you know, we're going to have a much steeper pullbacks. So we'll see how that goes. All the currencies really kind of just paused similarly. Not a lot of change other than the peso. The peso is the one that's again moving pretty sharply. So if you want to trade currencies, I would encourage you to learn how to trade the peso, $5 a tick and so forth. You can see nice movement in this thing. That's we've been primarily focused on this. We got New Zealand coming out tonight. We had Australia last night. Left rates alone and had that kind of minor sell-off and not any follow-through. So currencies are kind of pausing here. Similar metals, again, related to the dollar. So you had a little bit of a bounce off this level here in silver, but no follow-through. I think, again, if the dollar falls off, this may be the low in silver for the meantime. And then gold, we've been refocused on gold. This is something, if you have been waiting for gold, I think we're getting close to some levels on gold and copper and platinum. So all of these metals, if we do get a nice reversal in the dollar, will probably benefit and have a rally in the metals. Also, oil did come down to these areas here, which is a daily accumulation, daily demand zone. We are attempting a bounce, but now we're running into, we're going to run into some levels of supply up here at 91, 92. And this will test to see if this is this is going to continue to the upside, or in fact confirm that peak right here. And again, we had that blow off type of top here to 95, traded all the way down to 88, and now we could also be in a choppy phase here for a little bit. You know, it does tend to, we could be in this situation where we start forming another new range between, let's say, 88 and 95 could be the new range. We'll see on that. We got inventory numbers tomorrow on that. And then nat gas seems to be poised to break out of the $3 level. We're talking about that for a little bit here, weather changes and all that. So that's going to be interesting to see if that pans out here. And then not a lot going on in the grain markets after the sell-off on Friday. After, you know, with the grain stocks and all that, wheat actually did recover nicely. You can see that off that low. I was looking for a lower level in wheat down to 527, and it came up a little bit shy. Now it's rallying and possibly going back into the ranges. So aside from that, you know, we're coming into some really critical levels on a lot of this stuff. We could be in you know, it's either going to unwind really hard, or we're going to get a massive reversal in the next few days. I think we got non-farm payrolls on Friday. That could be the next kind of key catalyst here. But we'll see if we can get some continuation of the sell-off tonight. VIX jumping maybe even to 25, and that could be a good opportunity for a nice bounce here. Looking at the VIX here, you can see we just hit 20, 21 and pulling back. If we do break out above the VIX at 25, next level is probably going to be right around this 25. Last time we had that big jump in the VIX to 25, and then we came all the way back down. So we're in some really interesting levels on this as well. Okay. All right, everybody, I'm going to get out of here. Again, if you want to sign up for the class, sign up for the newsletter, all that, hit the links below. If not, have a great rest of your week, and we will see you on Friday. Take care.